Hello, my name is Mike Hetman, and welcome to another edition of CMS Forex News. Today is Tuesday, January 15th, 2008. We saw some important fundamental releases during Tuesday's trading session. From the UK, annual inflation to consumers was unchanged in December, remaining above the 2% target. Food prices played a big role in price increases. Core CPI was contained with a 1.4% reading. On the month, CPI doubled November's reading and came in at 0.6%. In an accompanying release, annual retail inflation eased to 4% in December from 4.3%. On a monthly basis, retail inflation matched the CPI figure of 0.6%. A survey of Eurozone and German analysts and institutional investors showed sentiment deteriorating as a result of the slowdown in the U.S. As the euro appreciates, German exports are expected to slacken, and economic growth is looking to weaken in the first half of the year. From the U.S., an advance release of retail sales for December saw a 0.4% decrease, both in the headline and core numbers. The report falls in line with other indicators that are pointing to a slowdown and possible recession in the U.S. The news capped off a very poor day in U.S. equities, with the Dow falling more than 200 points. In a separate release from the States, producer prices cooled in December to show a 0.1% decline after November's 3.2% surge. Core prices are up 0.2%, half of November's level. Since inflation hits this producers before consumer prices, it may be a welcome sign that inflation pressures may be subsiding. In a third release for the U.S., the New York Fed Manufacturing Index declined to a reading of 9 in January. Also, December's original reading of 13.0 was revised down to 9.8. This continues a downward trend as the indicator has fallen 18 points in the last 2 months. The pound-dollar pair had a strong day following the UK inflation reports. It had already been climbing in the pound's favor prior to the release, and those gains accelerated after the CPI and RPI data. The pair swung 200 pips from its session low, setting a high at 1.9739. The dollar fell about 90 pips versus the yen following the release of slowing U.S. retail sales. The pair fell 160 pips from the session open. It's the fourth session in a row that it has declined, and it is down 300 pips since Bernanke's speech last Thursday. The pound-yen pair gained 180 pips following the UK inflation data. It paired those gains after the U.S. retail sales figures prompted risk aversion. Talks of recession in the U.S. is causing investors to unwind carry trade positions. The increase to risk aversion put pressure on currencies such as the Aussie and Kiwi. The Australian U.S. dollar pair saw a 125 pips sell-off in favor of the greenback. The pair had been on a 2-week climb that brought it to a 2-week high. Later tonight, Japan will reveal its core machinery orders, current account, and corporate goods price index indicators. Overnight, the UK will reveal its employment picture, and the Eurozone and Germany will post their consumer prices. Tomorrow morning, the US will reveal its CPI, flows of foreign funds, and industrial production. And this completes your Forex news for Tuesday. For CMS Forex, I'm Mike Hetman. Good luck trading.